Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you're new here, do please consider subscribing down below. I talk about Australian real estate, finance, the economy, and financial freedom. And a great reminder to actually join the private Facebook group, Passive Income and Australian Real Estate Tips. It's a group, a community that I've really created around really like-minded people that are wanting to support each other to really grow and take control of their personal finance. So be sure to join. I've got a link in the description below. So this video is actually really special. It's been the most requested video that I've ever had to make. I've been getting people DM me on Instagram or on Facebook, hit me up on the Facebook private group, as well as, commenting down on previous videos. So I decided I'm gonna take the plunge. I'm gonna show you exactly what my property portfolio looks like. I'm gonna talk about exactly when I purchased them, how much I purchased them for, and what they were renting for at the time. And now currently, what are they renting for? What do the numbers look like? And my current LVR position. Now guys, this by no means is a flex. I definitely don't want to show this to go, hey, look at me and look at what I've done. It's more a source of inspiration. Sometimes it's quite often that you find someone else that's done something you want to achieve or that you didn't think was quite possible. So use this video as my source of inspiration towards you to go, hey, you know what? This is actually possible and it doesn't take a huge amount of work to get there. But if you have the right guidance and the right strategic plan, anything is possible. So guys, please take this as inspiration rather than a flex. And if you do enjoy this video, I'd love for you to give it a thumbs up. And of course, I want to spread this video to as many people as possible. There is a few things that I talk about in my portfolio that can really benefit some people. Now, before I get into the actual portfolio itself, I do want to make a disclaimer. This is non-financial advice. I'm not telling you exactly what to do. In fact, if you do seek that professional advice, you can reach out. I'll point you in the right direction. And of course, this video is testament to the search blueprint. Now, the search property blueprint is really about how I've been able to create a formula to help clients also achieve the sort of growth I've had in the last 6 to 7 years of investing. Now, when it comes to real estate, we are bound by our own thoughts, and sometimes we only know what we know. And of course, if you don't have an abundance mindset, you will lack the knowledge that you require to really excel into a high growth portfolio. So one thing I do say from the outset is that these properties that have performed really well for me, it's the exact same strategy, the exact same formula that I'm now using for clients. And so if you do require help, you do need some help because you don't have the time or that this stuff is foreign to you and you don't want to make a mistake, then definitely do reach out. I am a buyer's agent. I'm based in Sydney, but we're purchasing all across Australia. So definitely hit me up. There'll be a link in the description below as to how you can do that. Now guys, it's happening. Let's jump in. So property number 1 is a 3-bedroom house in regional New South Wales. I purchased this in 2014 and this was just one property on its own. The purchase price was $190,000. The previous rent, so the rent at the time was $235 a week. The current rent, however, is $285 a week and the current value is now $285,000. That is a 50% increase in value. Now that equates to a yearly growth of about 8% and the current loan balance is 207%. So the rental yield on debt is 7% and the LVR is 73%. Now guys, this is in regional New South Wales. If you've been watching my channel for a while, I am so bullish on regional centers rather than capital cities, like most traditional buyers agents have been focusing on. I love the fact that you can still get capital growth and cash flow, which really is important, especially now in building a portfolio that can generate positive cash flow, but also long-term growth. And as we go through this property portfolio, you're gonna realize why I'm so bullish on regional properties. And time again, people say, no, regionals don't grow. Regionals grow. It's just harder to find the really good performing assets. And that's why you need the help of an expert in the area that's actually doing this rather than someone that read it in a book and said, hey, that's a good idea. Let's continue. Property number 2 was also a 3-bedroom house in regional New South Wales, not in the same location. The year it was purchased was in 2015. This was also just a one-off property. It was purchased for $255,000. The previous rent at the time was $275 a week. The current rent is $335 a week, and the current value is now $365,000, which is 43% value increase and equates to about 9% yearly growth. The current loan balance is $284,000. The rental yield on debt is 6%, and the LVR is 78%. What you guys will see throughout this portfolio is the original debt amount compared to what it is now has increased over time because I've been able to use that equity, take it out and purchase more properties. So for most of my properties across the portfolio, I've purchased either with a 10 to 20% deposit. So that doesn't mean it was my own cash. I may have used some equity from the earlier properties, which you can see in the first two properties. I've taken out the equity, which is why the original loan balance has now increased to where it is. The other thing I want to make note here is that with regional center properties especially, if you're purchasing in a good location, your vacancy rates should be really low, which means there's no properties available and basically tenants are really wanting to get into your property. That really creates power for yourself in the sense that you have more tenants wanting to come and rent your property, pushing up the rental prices. So what you'll see throughout my portfolio is by purchasing the right locations in high demand areas, you not only have certainty of a tenant, but you've also got a certainty of rental growth. Now, rental growth is especially important. And so for some people, when they're thinking just capital growth, it really doesn't matter if you can't get the rental growth as well. Let's continue. So property 3, 4, and 5 all happened at the same time. It's a unit block of 3 properties, so 3 units attached to each other, 3 2-bedroom units, and the purchase price at the time was $360,000. The rent at the time was $515, but the current rent is $570, with the current value coming in at $440,000. Now that's a 22% increase in capital growth, which makes it 6% yearly growth, and the current loan balance is $322,000. The rental yield on debt is a massive 9%, and the LVR is 73%. Guys, what I'm saying here, and I think you can start seeing a pattern, is that rental growth and cash flow is so important as an investor, because if you can't get that right, you will not be able to build a large portfolio of properties that allow you to diversify risk by having all of these good performing assets in different locations. You might be forced into a position where if you start looking at capital cities and go, I want to spend $700,000, $800,000, $900,000, you may only be able to purchase 1, 2, or 3 properties, and then that's it. But if you have the correct blueprint and the search property blueprint, which I've developed over the years, you're really going to understand that there is a formula and it's not supposed to be sexy. It's supposed to be that it's all about the numbers. It's not about you and I wanting to live in these properties. It's about understanding the local demographic and what exactly is in demand. So property number 6 was my first purchase in Sydney. It was a 3-bedroom house in the Sydney Southwest, very close to the Liverpool CBD. The year purchase was 2016, it was 1 property, and the purchase price was $460,000. The previous rent was $330, and the current rent is $350 a week. The current value is about $560,000. The value percentage increase was 22%, and that equates to a 5% annual growth of capital growth. The current loan balance is $374,000. The rental yield on debt is 5%, and the LVR is 67%. Now guys, this is why I have been so bullish on getting good locations, good cash flow, and good properties in high growth areas. Simply purchasing something in Sydney doesn't mean it's gonna have explosive growth. Now this property itself is actually my lowest performing asset, and it's actually done quite well. To achieve 5% annual growth over the period of 4 years, to have 22% worth of growth, that's actually great. But now you're gonna start seeing the pattern that in my regional portfolio compared to the one I've got in Sydney, there's been a vast difference. Not just so much from the value perspective, because the difference of 5% and 6% hasn't been massive, but I'm getting yields of 7, 8, 9% versus 3, 5, 6% in Sydney. So this is where I really break it down, and you're going to start realizing why there's an opportunity out there. And it's not just because COVID came around and I've jumped on the bandwagon. I've been believing this from the beginning, and is now what I'm helping clients with. Property number 7 is a 1-bedroom unit in Newcastle. Now, before I continue, a 1-bedroom unit, oh my God, Ravi, are you crazy? Like, units don't grow, houses grow. I'm not sure what you're talking about. Well, yes, I purchased the unit block earlier, but this is a 1-bedroom unit on its own in a development of about 30 to 40 units. So it was a boutique sort of block, but it also had presented uniqueness. Now, I say this in a lot of videos, so you should definitely go check them out, is I talk about uniqueness and supply and demand really dictating price. It's not the fact that you have large land, because you could have large land, but no one really wants to live there. What you want is uniqueness, huge demand, low supply. So you're gonna see that units do grow if you can purchase them well. So I purchased this in 2017. It was 1 unit, and I purchased it for $399,000. At the time, it was renting for $390 a week. The current rent is $410. However, the current value is $545,000. The value increase has been 37%, which means 12% annual capital growth, and the current loan balance is $377,000. The rental yield on debt is 6%, and the LVR is 69%. Now, the reason I'm really getting some amazing growth in this property is because of its location. Now, yes, you could go and say, oh, Ravi bought in Newcastle, I better go buy in Newcastle. No. The fact is, where this property is situated means it can't be built in front of. And I've spoken about this in my earlier videos, where the point of uniqueness here is that it has water views throughout the entire apartment. Now, it's not a massive apartment, but it presents a unique opportunity based on the floor plan, plus the fact that no one can ever build in front of it, and uniqueness is really what driving the capital growth here. Now, before I continue, the next property has by far been the best performing asset I've ever had, and I definitely plan to hold onto it for a long time. But before we continue onto my best performing asset that I've ever purchased, definitely smash that like button. I want to get this to 500 likes. I know we can do it. I've got a previous video on passive income, so you should definitely go check out that video after this. This video is more focused on my debt levels, my LVR, and the capital growth, whereas that video really talks about the cash flow and how much positive income I'm making as a result of my investments. So definitely do that. So property 8 and 9 was a duplex build on the central coast of New South Wales. So I purchased the land first, and then after that, once the land was registered, I then got the building approved. Now, of course, I'm not a handyman. I don't know anything about tools or anything like that. So I got a build company, and I thought, you know what? I've done the purchasing and I've done the established properties. Why not try and build something? I saw this unique opportunity, the beautiful piece of land, and I knew, I did the numbers, that it all made sense. So here we built a duplex, and the timing was so impeccable here. And obviously with everything I'm buying, whether it's land, units, townhouses, or apartments, it all comes down to buying under market value, which allows you to use the equity as soon as you get, settlement happening. So essentially with this property, I knew the land was undervalued. We went in there, purchased the land, and then I went in to go and build. So with this, I purchased this in 2017. It had 2 properties on there, and the purchase price, which included the build price, was $561,000. Once it was completed, it rented for $850 a week. Its current rent is $870 a week, but is now currently valued at a combined $910,000. That's 62% increase, which is 21% yearly growth, and the current loan balance is $563,000. The rental yield on debt is 8%, and the LVR is 62%. So obviously, guys, it's not averaging 21% of capital growth. We did acquire that under market value, but as a reflection in this statistic, it does come across as yearly growth. However, I would predict it's more closer to about 10 to 15% capital growth, which is unheard of, especially in the last sort of 5 years, and outside of Sydney. So that's what's really exciting here. I'm getting super good cash flow. The property is new, so I'm getting the depreciation, but as I've said, every single time, property investing is not about simply reducing your tax. I'd rather have extra income than trying to avoid it so I don't have to pay a little bit of tax. So property 10, we've now come into 2020. So 2018 and 2019, I was really working on my businesses and I was really trying to figure out exactly what I wanted to do. At the time, lending restrictions really came into play. I wasn't able to borrow anymore. And so I sat and I waited for the market to do its thing. Now I knew I had really good properties in my portfolio and I was happy with it. So now I could go and work on my business that I was so passionate about. I've left full-time work and working for someone else. I could now be happy, do whatever hours I wanted to do, and I knew I could always come back into the real estate market, especially when things eased up, as well as that equity growth started occurring. Property number 10, a 3-bedroom house in regional Victoria. I purchased that earlier this year in 2020. That's just a one-off property and I purchased it for $419,000. Now the current and previous rent, because I only settled on it this year, is $350 a week. The current value, however, is $460,000, so that's already a 10% increase in value. The current loan balance is $340,000 and the rental yield on debt is 5% with an LVR of 74%. Now this property is super unique. I purchased this very strategically. I had the opportunity to purchase something else, but I saw a couple of things. Number one, it was really undervalued. And number two, this is on a 1,200 square meter block, which has the potential to build 4 townhouses. Now guys, when I talk about location is important, but this property is actually located less than 5 minutes away from a major regional center hub. So the opportunity here was too good to be true. And obviously I did my due diligence, but by the time I purchased this property, my skills in research, communication, and negotiating were at its all-time high. And so of course, when I purchased this property, I was super stoked and I understood the fundamentals of growth. So I wasn't too concerned with the level of rental yield I was getting from this property wasn't that great. As part of my blueprint personal strategy, I knew exactly what I wanted to get out of this property. It really goes back down to you purchasing property and every single property having some purpose in your portfolio. There's no point in having 16, 15, 30 properties in your portfolio if they don't really serve a purpose. Equally, if you only have 2 or 3, they may actually serve the goals that you have. So property number 11, 2-bedroom unit in Newcastle as well. This is a very unique opportunity. I was not looking at Newcastle at all, but in fact, having the relationships with agents makes the world of difference. So when I was speaking to the agent at the time, I knew that the area was doing really well and I already had 1-bedroom apartment in this block. So what ended up happening was I was talking to the agent and they said, hey, look, Ravi, there's actually another unit gonna get sold in the same block. The guy that wants to sell, the vendor, is actually desperate to sell because he's now found work in Perth, so he has to move. Now, he doesn't really want to get caught up with having debt here and he doesn't want to find a tenant. Is this something you'd be interested in? And the fact is, because it was in the same development that I had bought in previously and I knew all the uniqueness about this, the fact that it had unobstructed views of the water and the fact that it was so close to the business development hub and of course the major shopping area and cafe strips in Newcastle, I was like, this is a no-brainer, but we're gonna have to really work on a deal here. So I already knew going into it, based on my research, the value of this property was higher than what the listed price was. And I understood that because the vendor was really wanting to offload this property quickly, I could come in for a really good deal. So I ended up purchasing this property for $552,000. It rents for $540 a week, which is currently the same rate. The current value is $620,000, and that's a value increase of 12%, whereas my loan balance is only $442,000, the rental yield on debt is 6%, and the LVR is 71%. You're gonna see my LVR is quite low, lower than the 80%, and that's because not only was I able to purchase something under market value, but I've got it into a market that's actually performing really well. So of course, with those factors in play, that's why I've been able to go and secure property below market value, but also taking less risk because they've actually been able to create a buffer for me and have lower LVRs than higher ones. So my final property set is number 12 and 13. Now guys, I've made a detailed video about this property. You should definitely go check it out. I get extremely excited when I share this video with people. It's been one of my most exciting purchases and my latest purchase, so I'm always connected with it. A really short version of that story of how I purchased it was I was talking to the agent about another property and she said, look, you know, you seem like a nice guy. And we started building that rapport. And by then she was like, look, there is a property coming up. You're gonna have to move quickly. If you're serious about it, we can do the deal. And so I did all my calculations and I knew this was a banger deal. So let's run into the numbers. So I purchased this in regional South Australia in 2020. It's a duplex build, so there's two sides to it. And the purchase price was $260,000. Now the previous rent, which is also the current rent, was $530 a week. The current value is about $320,000, so the value increase is 23%, and the current loan balance is only $211,000. The rental yield on debt is 13% and the LVR is 66%. Now guys, for people that don't know what they don't know, this is an area that might not have ever heard of, but the fact is they've got growth fundamentals as well as huge rental demand. So that's why we're seeing such great numbers in terms of rental demand and rental yield. And again, every property has to serve a purpose. Now this property, I'm not actually purchasing for any growth. The fact that I was able to secure it under market value and actually has potential for capital growth is a bonus, but I really purchased this one as a cash flow play because I want to use the extra passive income from this property to then reduce my debt across some of the other earlier properties. And there's obviously a bigger strategy to that. And my total investment portfolio looks like this. There's 13 properties in total. The purchase price was about just under $3.5 million. At the time of purchasing all the properties, they rented for about $4,015 per week. The current rent has now gone up to $4,240. The current value is about just over $4.5 million. And the value increase since purchasing has been an incredible 31%, which averages out to a yearly growth of 10% capital growth per year. The current loan balance is about 3.1 million, so there's about $1.4 million worth of equity. The rental yield on debt is 7% and the LVR total is about 70%. So that wraps up my entire portfolio. I am so happy to have created such a strong portfolio and foundation for long-term growth. Again, guys, this is no flex. This is not about, hey, look at me, look at me, look at what I've done. This is about inspiring people to go, if you really apply yourself and want to make this work, it is possible. Looking back on my entire journey, my biggest regret is that the first couple of purchases I made without having the proper research. Now, although those numbers look great, I also know that a couple of streets away, those properties have actually grown slightly higher than what I have obtained with my properties. So this is where it's so important to get the right help, the right coaching, and the right guidance. And so if I knew what I know now, then I would definitely have purchased that with a buyer's agent. And this is not a sell and a quick, right hook saying, hey, you should definitely hire me. But what I'm saying is, you need to be open in your mindset. When we're talking about having generated $1.4 million worth of equity, if I had to pay an extra $50,000 or $60,000 for someone else, an expert in that field, to go and source these properties and negotiate on my behalf, I would take that deal any day of the week. If a buyer's agent was able to do that for me, I would definitely have taken up that deal. But hindsight is a beautiful thing. And of course, I make these videos so that you don't have to make those mistakes yourself. If you have enjoyed this video, please share it with someone. And of course, subscribe down below. A bunch of you have been watching, but haven't subscribed, so please do. And I thank you so much for watching all the way through. Definitely join the private Facebook group. I'll have a link in the description below, and definitely go check out my passive income video because I think you'll enjoy the passive income side of what this portfolio generates for me. I'll catch you guys all in the next video. Thanks, guys.